maximizing returns and minimizing risk, investing in mid or small cap funds. Welcome to Everyday Elevate. Today we're diving into the world of mid and small cap funds, aiming to maximize returns while minimizing risk. As we navigate through mid caps and small caps, it becomes apparent that although they represent distinct categories, there's no specific mid-small cap category to bridge the gap. The ongoing discussion about stretched valuations in these segments underlines the need for funds that encompass the entirety of the mid-small cap landscape. We'll explore indices like the nifty Mid-Small Cap 400 Index, which offers exposure to both mid and small cap stocks, opening up a broader spectrum of investment opportunities and aiding portfolio diversification. However, with broad-based market cap-weighted benchmarks, liquidity issues and quality concerns often arise. To address these challenges, indices like the nifty Mid-Small Cap 400 Momentum Quality 100 Index apply criteria such as liquidity, quality, and momentum to select stocks, minimizing risks while preserving return potential. Ready to elevate your investment game? Subscribe now to Everyday Elevate and stay updated with the latest insights, tips, and strategies for maximizing returns while minimizing risk in mid and small cap funds. Don't miss out on valuable content to enhance your investment journey. Hit the subscribe button and let's elevate together. The need for a comprehensive mid-small cap fund. When we delve into mid caps and small caps, it's evident that while they each represent separate categories, there's no distinct mid-small cap category to bridge the gap. The ongoing debate about stretched valuations in either mid or small caps, or possibly both, highlights the urgency for a fund that encompasses the entirety of the mid-small cap segment. This would cater to investors seeking a diversified portfolio that mitigates the risks associated with concentrated exposure to either mid or small caps alone. In response to this market need, the creation of a fund that offers comprehensive exposure to the mid-small cap landscape is imperative. Such a fund would empower investors to construct portfolios that are more resilient to market fluctuations, drawing from a wider array of opportunities. By bridging the gap between mid-caps and small caps, investors can navigate market uncertainties with greater confidence, fostering a more balanced and prudent approach to portfolio management. Navigating mid-small cap investments. In the realm of active mutual funds, there isn't a designated category that caters directly to this requirement. However, investors can turn their attention to potential indices that encompass both mid and small cap stocks. One notable benchmark in this regard is the nifty Mid-Small Cap 400 Index. This index consolidates companies listed in both the nifty Mid-Cap 150 and the nifty Small Cap 250 indices. Notably, it allocates roughly 2/3 of its weight to the mid-cap segment, while the remaining 1/3 is dedicated to the small cap segment. Leveraging indices for diversification. By exploring such indices, investors gain access to a broader spectrum of mid and small cap stocks, which can be instrumental in diversifying their portfolios. While actively managed mutual funds may not explicitly cater to the mid-small cap category, leveraging these indices provides a strategic avenue for investors to tap into this segment of the market and potentially enhance their investment strategies. The Mid-Small Cap Index and its risk-reward profile. As anticipated, the Mid-Small Cap Index provides a modest exposure to small caps with a slight uptick in the risk profile. For instance, as of March 31st, 2024, over the past 3 years, this index has delivered a return of 27.1% compared to 26.6% from the nifty Mid-Cap 150 Index and 28.4% from the Small Cap 250 Index. However, it comes with a volatility risk level of 16.3%, slightly higher than the 16% of the Mid-Cap Index and the 17.7% of the Small Cap Index. Strengthening mid-small cap investments. However, unlike large cap indices, mid and small cap benchmarks, which are broad-based and market cap-weighted, are comparatively more vulnerable to liquidity issues and a lack of quality in constituent stocks. One approach to mitigate these challenges is to employ factors such as quality and momentum to screen stocks from the mid-small cap universe. Utilizing a combination of factors like quality and momentum has the potential to reduce the susceptibility to discussed risks inherent in plain vanilla benchmarks while preserving return potential. What factors are contributing to the gradual rebound of mid-caps and small caps from their previous lows? An example of such an index is the nifty Mid-Small Cap 400 Momentum Quality 100 Index. This index meticulously employs criteria such as liquidity, quality, and momentum to select 50 mid-cap and 50 small-cap stocks, forming a portfolio of 100 stocks. Subsequently, these 100 stocks are weighted based on a combination of their factor performance and free float market capitalization, resulting in a weighting of 70%, 80% for the mid-cap segment, and 20%, 30% for the small-cap segment. The inclusion of quality factors serves to cushion against drawdowns during periods of heightened market volatility, while the momentum factor may facilitate faster recovery. With approximately 65%, 75% allocation to mid-caps, it's reasonable to draw comparisons between the nifty mid-small cap 400 Momentum Quality 100 Index and actively managed mid-cap funds, and the index certainly lives up to expectations. As of March 31, 2024, the index has surpassed over 80% of direct plans of actively managed mid-cap funds across various periods, including 1-year, 3-year, 5-year, 7-year, and 10-year spans. This is why mid-caps and small-caps could potentially consolidate in the medium term. In summary, while there are increasing concerns about allocating funds individually to mid and small caps, there is also considerable interest in investing in these segments collectively due to their return potential. One promising approach to participate in both categories could be through a fund that offers genuine exposure to both, functioning similarly to a multi-cap fund. Wouldn't that be an intriguing option? This guarantees that investors maintain participation in the mid-cap segment while also enjoying reasonable exposure to small caps. A mid-small cap fund, adhering faithfully to its label, can serve as a bridge, alleviating investors from the dilemma of how much to allocate to each segment. This could be the solution investors are seeking to address the aforementioned concerns while still pursuing return potential, with only a slight increase in risk profile. As we've explored the world of mid and small cap investments, it's clear that there's a gap in the market for comprehensive funds that cater to both segments. The ongoing debate around stretched valuations and the need for diversified portfolios underscores the importance of bridging this gap. By empowering investors with funds that offer exposure to both mid and small cap stocks, we can construct portfolios that are more resilient to market fluctuations. Leveraging indices like the nifty mid-small cap 400 index provides access to a broader spectrum of stocks, enhancing diversification opportunities. While mid and small cap benchmarks may pose challenges such as liquidity issues and quality concerns, employing factors like quality and momentum can mitigate these risks. This strategic approach preserves return potential while reducing susceptibility to market volatility. As we navigate the landscape of mid and small cap investments, it's essential to stay informed and explore innovative strategies. Join us on Everyday Elevate as we continue to elevate your investment journey and help you achieve your financial goals. Subscribe now and let's elevate together.